Hello, traders. I've got a stock that looks great right now, and I'll explain how I found it and why I like it. Subscribe to my channel now and turn on your notifications so that you don't miss any of these daily trades. You'll help me build my channel, and I'll help you build your account. Let's get started. We are 2 hours into trading. It is Wednesday, March 17th. Happy St. Patrick's Day. It's also FOMC Day. We've got the Fed meeting this afternoon. They're going to release their statement at 2 o'clock Eastern Time, 1 o'clock Central Time. That's what the market is waiting for. We are dead till the Fed. So the market's going to chop around. Let's take a look at what we're doing. Actually, let's take a look at Intel first. This was my pick from yesterday. I'm bullish on Intel. I like the breakout. You can see this is about 2 hours into trading when I did the video yesterday. Stock has pulled back. Not good, but it is pulling back with the market. And the other thing that's weighing on the market right now is the TLT. Uh-oh, TLT making a new low. This is putting a lot of pressure on tech stocks. Tech stocks are more interest rate sensitive. As interest rates go higher, tech stocks pull back. We'll go into the daily chart and you can see that the TLT has not found a bottom. This breach of the lower end of this downward sloping channel looked like a selling climax. Not so fast. We can see that interest rates are continuing to climb. The market does not believe that the Fed is going to be able to maintain its loose monetary policy. The reason for that is they feel that the economic rebound is going to be super, super strong. Analysts have been raising their guidance. Some feel that even by the end of the month, we will reach levels that we were at a year ago. And so that puts pressure on the Fed to start tightening. What the market wants today is they want some fist pounding on the table saying, we are not raising rates until the back half of 2023. In fact, we're going to be doing some more Operation Twist, which means that they are going to be selling longer term bonds, buying shorter term bonds, and that should help the interest rate yield curve. In any event, it's all about the Fed right now, and it's all about the market reacting to the Fed statement. Before that, we're just going to see some chop. You can see nothing organized here. Got a lot of green and red candles. We're waiting for this 1OP cross right here. We got it. Waited for support. Got a nice bullish hammer in here. I bought the S&P, took a 40-cent profit on it. I'm not going to press it on a day like this. We're just going to chop around. Now, given that the TLT is moving lower, I decided to take early profits. If the TLT had been moving higher and if it had bounced with the market, then I would have stayed trying to maybe get out at this level right here. So you need to put the market into context every single day. Well, today's context is we got a Fed meeting. That means that we're just going to chop around. Everybody's going to be posturing themselves, getting their positions ready. The news is going to come out. It'll be like trying to drink water from a fire hydrant. The market will be all over the place. Try not to trade this afternoon. Wait for at least a half an hour. There's a press conference after the FOMC statement. Wait for those remarks. If we get a nice strong trend in one direction or the other with an hour left of trading, then there'll be an opportunity for you to join that move. Otherwise, I'd stay clear of it. Let the dust settle. Oftentimes, just after the announcement, you get a move, but it isn't until the next day that you really get a feel for how traders digested that news. And the next day is when you see the legitimate move. We have quadruple witching coming up. That means that futures and options are going to be expiring. That usually adds market volatility. So that's also a factor that we have to watch Thursday and Friday this week. You can see how the market has been able to grind its way back to the all-time high, and now we're just kind of floating there, and we're testing that breakout right there. We broke out. Now we're coming back to test it. This is pretty normal. Now we don't want to see it slide back on the back half here, or that would suggest that anybody that bought this breakout right in here is going to get flushed out, and we'll see further selling on the back side. Overall, I'm fairly bullish right now. At the beginning of the year, valuations are super stretched. We still had the coronavirus cases increasing. Now we're seeing that we've got solid economic growth. We've got coronavirus cases decreasing. We got a $1.9 trillion stimulus bill. Some of that money is going to hit the market, so we can expect that there's going to be a decent bid. Right now, interest rates are not at a level that they're going to impede economic growth, so I'm not overly concerned about it. I think that a growing economy is excellent. So we'll see if interest rates just pause and they stop going up. I think you're going to see a nice market rally. Hopefully, the Fed is able to give those reassurances today. So for now, don't take any positions ahead of the FOMC statement. If you are short out of the money bullish put spreads, great. That's the strategy that I've been advising you to take advantage of, and Intel is a good case. Now, Intel, I actually did mention that you could buy longer term in the money calls. I do still like that stock. You can see that nice breakout that's been maintained. Yes, it might come back and check it, but I think that Intel has a nice breakout here. It's also got a nice upward sloping trend line, and we know that semiconductors are in shortage right now, so their business should be very good for at least the next quarter or two. Let's take a look at what else we've got. I'm going to go through bull run, and I'm just going to quickly look down the list. BUD was looking pretty good. We've got some movement in chemical stocks, 3M. That actually looks really nice. We also had Dow Chemical moving higher, downward sloping trend line, breach to the upside, horizontal breakout right here. This stock looks actually pretty good, so I like MMM. I'm going to continue to go down the list, take a look at a few more here, see what else we've got. And UNH has also been a really nice stock. You can see this upward sloping trend line right in here. It's small, but it's got some nice traction. This is a choppy stock. This is one where you'd want to try and sell an out of the money bullish put spread below that $340 level, which is the 100-day moving average. That would be a good tactic to use there. Then I continue to look down. Caterpillar has also had some strength here. Nice breakout right here through horizontal resistance. You can see how the stock is strong today. Anything below this 210 level, I think, would be a really good out of the money bullish put spread to sell. Because we're so far out of the money, you may have to go out past April expiration. You might even have to go out into May, but that is a nice setup right there below this support level right here. If the stock pulls back and it takes out that support level, there are going to be some major economic concerns about growth, so forth and so on. As long as the economy is on track, I think you're going to see Caterpillar do well. There's also talk that there's going to be a new infrastructure bill that Democrats are going to be voting on. That certainly would be good for Caterpillar. I like Caterpillar. I think that that is probably going to be my pick of the day. Love this horizontal breakout here. It comes back and it checks the halfway point of this long green candle, which is the breakout, tests it there. Today, we're up with the market down. So Caterpillar is probably going to be the stock of the day. I'm going to continue to take a look down here, see what else catches my eye. IBM continuing to push higher. IBM we noted way back when it was starting to break out through horizontal resistance. Let's take a look at that because I know I'd referenced this in one of my videos. I love that horizontal breakout right there and the fact that we had those major moving averages just below. That lent very, very strong support and it's set up well for an out of the money bullish put spread. If you did that one, you're happy. So I think I'm going to leave with Caterpillar. The primary thing that I want to mention to you is the importance of putting the market into context. I know in the chat room today, we had a lot of people kind of sitting on their hands going, what are we going to do? What are we going to do? This is boring. Yes, it's boring. One of the most important things that you can learn as a trader is when not to trade. And it's really hard to do because we're all geared into a mode of got to find a trade, got to find a trade. There's a good trade out there. Let's trade it. The probability of success is very low when you've got no market tailwind and a lot of chop like we're seeing right now. Let's go back into the TLT. Let's take a quick look, See what it's doing. We got the market trying to go higher here. We need that bounce in TLT. If we've got a nice little bounce in TLT and it get above the open of this long red bar here, and we've got the SPY up on the high of the day, it'll have a chance to go in and fill in some of this gap. So this is just position squaring, institutions out there testing the bid. We had a rally higher yesterday, and the rest of the day we sold off. This has been very typical of gaps higher to a new relative high. We see a day of selling, we see follow through the next day, and then after a day or two, the market starts to regain its footing and it takes out that high. So it is a 2 steps forward, 1 step backwards process that you can expect to continue. So keep it light into the FOMC, let the dust settle. Let's see what happens. I do believe overall that the market's had time to start gaining momentum, gaining a bid. We've got almost another quarter of profits that will help valuations. Earnings season is a few weeks away, so I do see the market bid strengthening. I do believe that we are going to see a market breakout, even if the FOMC reaction today is negative. Within the next week, I believe that you're going to start see us challenging that high. SPY 400 is an easy target. 410 and 420 might even be possible if accompanied by strong economic growth. Thank you. Have a green beer for me. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.